All right, welcome back, traders. We have on the line a good friend of mine and one of the premier guys in the blog sphere for the finance world, Mr. Greg Harmon, CIO and partner at Presidium Capital and founder, if you're looking for some really good reading material, at Dragonfly Capital. Good morning, Greg.
Good morning, Kyle. How you doing today?
Fantastic, man. Happy to be hosting here in lieu of Joel being out this week. Now, I know Dennis was wicked excited to bring you on this morning. We got a lot of things going on, especially a lot of earnings this week. Before we start there, how about you? What's on your radar for the week?
When I was on your show a couple of weeks ago, I talked about the round numbers being something that are difficult to get through sometimes, and we've certainly seen that. 200 in the SPY, 2,000 in the SPX, 17,000 in the Dow, 4,000 in the NDX have all been numbers that have been tough. But one more thing that I'm looking at today is I've got an indicator that I look at on the VIX. Some people that follow me may have seen it before because I've written about it a few times, but I've noted that the last 12 times that the VIX has spiked up over all of its simple moving averages, the 50, 100, and 200-day moving averages, and then spiked back down. Each time it's been a signal that the SPX is going to go to new all-time highs. And with the pre-market move here, and the VIX probably going to open a little bit quiet, I'm watching the number 1261, which was the lowest SMA, to see if I get another signal there.
So you think is that what you think is going to happen here, Greg? You think we're going to keep marching here up to new all-time highs, or are we going to get a little bit of pullback before then?
Well, I think that is one indicator that says that we could be marching up to new all-time highs. Do we get to 200? Maybe not. I still think that we're going to flog around a little bit for the week. We've got the Fed coming in with the minutes on Wednesday, right? So despite the press conferences and all the talk since then, those things can tend to have a little bit of a sell-off effect too.
When you break down into the internals here, though, I was just looking through on the weekend there, running some scans, and there was about 27 S&P 500 stocks making new all-time highs, and it's pretty broad here, Greg. I'm looking at Disney making new all-time highs, Home Depot, Berkshire Hathaway making new all-time highs, couple biotechs, Amgen and Gilead, Love LUV, which is Southwest Air, MARCVS. So you're looking at a lot of different sectors as stocks making new all-time highs. Do you think that's one indicator that you look at?
I don't look at the number of new all-time highs because I tend to look at the market in general and then to focus on specific stocks.
Top-down approach. Right.
Yeah. But what I did note this weekend was that the transports were starting to look really good again. And as the transports start leading again, that's going to bring the Dow up as well. Biotech indexes all looked good this weekend as well. So those look like the two strongest places to look this week.
Isn't that what always happens here? It seems like in this bull market from the last 5 years, it's like the money, if it's rotating, doesn't seem to rotate out of stocks and into cash. It just rotates from one sector into another sector, and the sector rotation continues to drive us higher. So it's like, okay, I'm nervous in this sector. This sector's ran too far. I'm not going to take my money out of the stock, so I'm going to move it into another sector. And isn't that kind of the difference from where we were 3 or 4 years ago, where they were willing to move money out of stocks? It seems like investors just aren't willing to do that anymore.
Yeah, I think that's quite true. I mean, you've seen bonds just keep going higher, yields going lower as the stock market keeps rising. And if you look back far enough, there's a lot of precedent in history for bonds and stocks to rise together. But over short-term spiky moves, people tend to notice that more often and tend to think that that's what's going to happen is when one spikes, the other's going to go the other way.
Now, Greg, I was reading your blog this morning, as I usually do, and you had your top trade ideas for this week. I want to talk about Union Pacific, UNP. What did you see that was interesting there?
UNP, I wrote about that one this morning. Let me pull up my chart. That's a stock that seems like it's gone through a repeated pattern. March through April, it went through its consolidation. Kind of gave a false breakdown out of that consolidation and then moved higher up into the 100 area. Since mid-June, going into last week, it had been consolidating as well between about 98 and 103, and gave one of those false breakdowns again. That false breakdown touched the 100-day moving average, and it's been moving back higher. So I like it, at least for the short term, up to the top of that trading range, but with a rising RSI and a MACD that's in good shape and rising too from a low level. A breakout could certainly happen here, and you get a move up higher.
What other stocks were you looking at here this weekend, Greg? Do you have anything else on your radar?
Alexion Pharmaceutical looked pretty good to me. Another one that's kind of been in that consolidation mode.
ALXN.
ALXN, yeah. So if you look at a theme here, that one's been in what we call an ascending triangle pattern since pulling back a little bit in mid-March. And that one over 172.50-ish looks good for a good run higher.
Greg, can you elaborate on the, you said the ascending triangle. Can you elaborate a little bit on that for us?
Sure. If you understand what a consolidation range is, so that the stock price keeps going up and hitting a top and then getting sold off and coming back down and finding a bottom and getting bought, creating a tight range. An ascending triangle is where that bottom range tends to shift higher every time, so it's a higher low every time, creating a tightening of the consolidation. These patterns tend to result in a move equivalent to the widest end of the triangle once they do break out of the range.
Greg, what do you think of gold here? We're selling off a little bit, and obviously we've been fairly, well, if we look at it over the last year, we bottomed there in the lower 1200s, and we've come back a bit here. We're just kind of hanging out here just around this whole 1300 area. We can't seem to get away from it. Is there anything in the technicals that are jumping out at you in gold? Because a lot of our traders do like to trade the gold futures.
Yeah, from what I see, and I'm not a short-term gold trader, but for the swing to intermediate term, this looks like it's just been in a flat-out consolidation zone since pulling back from the highs at 1900.
Do you think the traders are waiting to hear, like, out of Ukraine, all these overseas worries here? Do you think they're just kind of hanging out here and there's jockeying, basically, where people think it's going to get worse overseas and people think it's going to get better overseas, and it's just basically a battle of the bulls and the bears here for safety?
Well, I don't know about that for gold. Because gold has a reputation for being an inflation hedge, for a safety hedge, for all these different things, and none of them make any sense to me fundamentally. But what you can look at is, last week, Friday, it was clearly, after a big run-up, no one wanted to be long the SPY over the weekend. And you had that sell-off that was, if you put your finger over that sell-off part of the chart from about 11 o'clock on to the end of the day, if you put your finger over that and look at the rest of the week and the continuation in the pre-market today, you've got essentially a straight trend higher outside of that panic sell-off.
And just moving on here, Greg, what about the crude market? Because the market has been rallying here the last week and a half, but crude just can't seem to get a lift. We're down here again in the pre-market, trading down another 90 cents here on crude. Why do you think the leak in crude?
Well, fundamentally, I've got no clue as to why it's been leaking, but it did hang out around $100 for quite a while before breaking down technically. From my perspective over the weekend, I'm calling for it lower again, still in the next week or two. And the key level there is around the 91.50 to 92 level. A break below that, and gas prices could get really cheap this fall.
From your technical analysis, are you usually a seller of weaker stocks and a buyer of stronger stocks?
I would say that up until about 4 months ago, that's probably a good description of my strategy. But once we started going back and forth in a range for a while with the SPY and the IWMs, that's shifted to looking to buy pullbacks in strong names that found support.
And selling
So
the rips
most of
in some
the
of these too. Like I've noticed, a lot of stocks that seem to rally $3-4 when it's not on fundamental information seem to come right back down here too. It's kind of like a fade trade the market's turned to, wouldn't you say?
it's somewhat like that. Yeah, it's been an easy market or an easier market to buy support and sell resistance. We do a lot with options in our group, so we can protect some of that stuff and sell premium to kind of stay in positions a little longer than some people too, though.
All right, Greg, I was actually wanting to pull up a couple more tickers here too and give some more trading ideas for the audience. Anyone got questions for Greg, make sure to put them in the chat room for us. Airline that I, last couple months, traveled for the first time, I can't remember which city, Allegiant Travel, ALGT. It looks like on the chart it's hitting again for a third time resistance. What did you see with Allegiant?
Yeah, it's the same pattern that we talked about with Alexion. It's one of those ascending triangles. The top I have booked as kind of a range between 123.50 and 126. And the bottom from late March at about 108, now making higher lows to where the last set of lows was around the 100-day moving average at about 117.50. Had a great run up to the top of that range again, or the top of the resistance, but then pulled back a bit Friday. With oil lower, this is a stock that should be going higher. I'd like that on over 125 for more upside, maybe even $15 upside.
If it goes upside, you said about $15. What I can't find how far back I got to go for that level if it rips above 125. Looks like about last year. It looks like
the.
I think that's an all-time high, Kyle. The
okay.
125 area.
Yeah, I think that is an all-time high.
All right, next ticker we got up for another idea for everybody is the CBOE, CBOE. What do you see on the chart here, Greg?
Yeah, and I think that there have been a lot of people that have been in this for the short-term run here over the last couple of weeks. I see it as being at a pretty critical point right now. The 5150 area has been resistance since May. It's bounced up against there a few times in kind of a round bottom pattern. Technically, if you follow the harmonics, there's a Gartley pattern that has just completed. So it's at risk for a potential pullback in the short run as it gets close to the 5150 level again. But the harmonics do allow for some flexibility as well. And if we get over that 5150 level, say the 52 level, that could morph into a stronger pattern called crab that has a lot more upside to it.
What's that? What is that pattern you're talking about, crab?
Well, it's another harmonic pattern. So it's an ABCD pattern. The distinctive piece of these patterns is that they tend to look like they have kind of a W in them.
Okay.
But the two bottoms on the W are not at the same level, and the pullback to the middle of the W, along with the difference between the ratios and the bottoms of the W, is what creates what has been the difference between a crab or a bat or a Gartley.
What are those? I'm going to keep you on these terms here because these are ones that I don't use daily in my trading. I don't have all these fun names here. What's the bat? The bat sounds fun.
Yeah, none of these patterns actually look like a bat or a crab or anything,
okay.
but they're pretty cool names.
All right, and just a couple more tickers here before we jump off. It looks like IQNT you have is a bottoming and reversal play. So what did you see on this one, Greg?
Yeah, so IQNT went through a big consolidation from November through February last year and then popped up higher. It sat in a higher consolidation range between about 1350 and 15 from February until it reported earnings in mid-July, and then it crashed back down and made a double bottom at 10. This one now sees things that I like in this type of a market where we've had the opportunity to buy support and run things higher. The RSI moved deeply into technically oversold territory and is bouncing back up now. The MACD fell off hard and has crossed back up now as well. Both signals to get long. And the stock price is following suit, so there's no divergences here. There is one potential flying ointment here. The 20-day moving average is pretty close above at about 1120, 1115, somewhere in that range. But if we can get through that, there's a lot of room to the top of the box from the previous move at about 1250. So that's not a bad move. You think $1, but $1 and $10 stock is a good move.
Greg, let's go to the big gun that everybody likes to talk about, and we haven't talked about on the show here for a couple of days, is Apple here. And it's kind of been coming back here. It struggled to get to that big triple-digit number of $100. Got up there in July to $99.44 and then sold off a little bit with the overall market. Has been coming back here. Got as high as $98.19 in the pre-market here this morning. It's trading at $98.58. What are the technicals telling you on Apple?
Yeah, Apple looks to me as if it's been in a kind of a range as well, from 93 to 98, 99. That little pop over at the last top. But that range is kind of drifting a little higher, too. You've got higher lows and higher highs along the way since all the way back to April, when it was down at about $74. So it's got the potential to get there this time, to get to that 100 level this time.
All right. Well, Greg, we really appreciate you coming on the show, man. Great to talk to you again. That is Greg Harmon from Dragonfly Capital. I dropped the blog and a couple of articles into the chat. Check out his trading ideas. Greg, thanks for coming on today.
Thanks again, guys. It's good.
Thanks, Greg.